Thank you for joining me today. My name is Casey Good and I'm with Heinfeld & Meach, and we're going to be going over charitable contributions and briefly discussing the substantiation and disclosure requirements once your organization receives a donation. So at this point, we've received a donation, but what now? Well, taxpayers generally contribute to charitable organizations with the expectation that they will be able to take a deduction on their personal income taxes. Your organization may already send thank you notes to encourage future gifts, but is a simple acknowledgement enough for donors to claim a charitable contribution deduction on their tax returns? Well, it really depends on how much they've given you and the nature of the contribution that you've received. Luckily, the IRS has weighed in on this and has given us some regulations to follow for any donation. So a donor must have a bank record or written communication from a charity for any monetary contribution before they may claim a charitable contribution deduction on their federal income tax return. But specifically, what qualifies as a bank record or written communication? The IRS defines a bank record as either a canceled check or a bank or credit card statement that has the details of the transaction clearly labeled on it. And they define written communication to include a simple receipt or a letter from your organization like a thank you note. However, they must clearly show the name of your organization, the date of the contribution, and the amount of the contribution. However, in some instances, the IRS says that a simple thank you note will just not suffice. And those are if you receive a contribution of $250 or more of cash or non-cash contributions, or if you're in a quid pro quo situation where you provided goods or services to donors who then made a contribution back to your entity of $75 or more. Now, we're only going to focus on the first situation in this presentation today. So if you're in a situation where the donation is worth more than $250, your written acknowledgement should include the name of your organization, the amount of any cash received, a description, but specifically not the value, of any non-cash contribution received, and a statement that no goods or services were provided by the organization in return for the contribution. Now, specifically, we don't want to estimate the value of any non-cash items received because we may price the item differently than our donors. Technically, the donor is responsible for requesting a written acknowledgement from your organization. However, to encourage future giving, it's helpful for you to initiate the process. Another way to help your donors out is to alert them to the importance of the written acknowledgement that you are providing. And you may want to consider adding a statement at the bottom of that acknowledgement, something to the effect of what's on the screen here. Please keep this written acknowledgement of your donation for your tax records. However, we must be careful not to give tax advice within the acknowledgement itself. There's two examples on screen that you may consider using. All or part of your gift may be tax deductible as a charitable contribution. Please check with your tax advisor. Or simply, your contribution is tax deductible to the extent allowed by law. Now, at this point, it's a good idea to check that your online donation system is set up to provide the proper documentation, and check with your development office to see what language actually appears on both the solicitations and the thank you documents provided from that office. Now, the donors must receive the written acknowledgments by the earlier of the date the donor actually files their individual federal income tax returns for the year that the contribution was made, or the due date of the return, including any extensions. Now, we don't know when our donors are going to file their actual tax returns, so best practice is to try to get these written acknowledgments out by January 31st to allow them enough time to process their taxes. For additional details on substantiation and disclosure requirements, please review IRS Publications 526, 1771, or you can access online training at stayexempt.irs.gov. You may also visit Heinfeld Meach University at heinfeldmeach.com/HMU. And thank you for joining me today. If you have any further questions or comments, please feel free to email me at casey.good@heinfeldmeach.com. Have a great day.